Well, here's what happened to the share market when the November employment release hit traders' screens. And here's what happened to the dollar. It's because the odds of a rate cut in February suddenly fell, probably to zero, although it still depends on the quarterly CPI due on January the 29th, 3 weeks before the Reserve Bank's February meeting. If inflation continues to fall without an increase in the unemployment rate, the RBA's board and staff will all have to go back to school and relearn macroeconomics. So far this year, the labour force, as measured by the ABS, has increased by 400,000, of which 393,000 got a job and 14,650 didn't, which doesn't add up, I know, but anyway. The unemployment rate was 3.9% last December and is now 3.9%. Unbelievable. Now, this graph compares the increases in unemployment through the last 6 economic slowdowns: the recession of the 80s and 90s, the GFC, the dot-com bust, the pandemic, and this time unemployment has barely increased even though interest rates are up a lot and GDP is down. Today the ABS also released net overseas migration for the year to June. It was 445,000, down from last year's 536,000, huge amount, but still more than double the normal 200,000. The Aussie dollar is now trading comfortably above 64 US cents and 61 euro cents. The share market had its 5th fall in a row, with interest rate sensitive stocks copying most of the selling. Global markets all went up because US inflation data last night reinforced the market's view that US interest rates will be cut again next week. And on commodity markets, gold and oil went up while iron ore eased. And that's finance.